all tax deferred the whole time, no timing restrictions, right? No hopping through hoops or having to chase down deals. It gives you the chance to sell high and buy low. So have you ever heard of anything like this? It's called a deferred sales trust. I'm curious if you ever heard of that before.
I have not, but I definitely want to put that in front of all my people that are out there. That is a good option.
What would you say is the biggest frustration when it comes to capital gains tax or the 1031 exchange that you've seen as it pertains to, for example, real estate, which can be very difficult to find the deal, but even businesses, you can't 1031 anymore, right? It used to be you able to do that, or even if you wanted to, it's really difficult. So what has kind of been your take on, exiting assets?
Generally speaking, what I've seen when my people are exiting their assets is the same year they try to get into another business as quickly as possible on that one. That always tends to offset things. So they look for something else they can invest in. I had a gentleman that sold his kitchen remodeling franchise after building that for 3 years. And then he just went into an even bigger franchise system, which is a trampoline park or something of that sort, where it was even bigger investment. So he just rolled all that money back into that one. The other way that you can go if you're concerned about that and you got a lot of forethought is to go look into the 401k or IRA rollover, where when you sell the business, the money that you make from it just goes back into the 401k plan.
Got it. And now, but sometimes folks may not have that, those abilities. Like we just did a business sale in Colorado, $8 million exit. And in fact, the business was a C Corp that was built for decades. And no basis left, right? Looking at about 35%, maybe even 40% of the total proceeds being crushed by capital gains tax, depreciation, recapture. So what's been the way, if any, that when people come to you, you're like, okay, great, Greg, I've helped with the franchise. I built it up. I've got 25 locations of these Taco Bells, and I'm going to sell it for $12 million, $13 million, $15 million, whatever it is. I mean, what do you tell them? What's been maybe a mistake that they make when selling and having to face the capital gains tax?
Well, one thing you can do is that if you don't necessarily want to sell the whole thing, maybe you want to get in and keep a share of it on that one. I've had some people that would stay with it for a little bit and sell off a big chunk or of it themselves, but kind of keep it with them also on that. But for the most part, most of my people just really what they've done is just really gotten into another business, especially another franchise business is what they've really gotten into to help offset. So I haven't had a whole lot of dealings with people that have just sold out and just said, end of it. I'm all done. That's it. I don't have anything else to do with my money. They've always just really gotten into something else or just sold off a portion of it and kept some of it themselves. So they're kind of managing partners.
Okay. So if I'm hearing you, are you saying they're able to defer and roll the gains into the next business? Are you still seeing that happen? Okay.
Yep. Usually always is what most of my people, I haven't gotten anybody to the end of their career where they just want to retire yet. They've all the people that I've worked with have just, even in their 60s and 70s, sometimes they'll just go pick up something else, especially one that they can do semi-absentee, and they'll just go right into that one.
Okay, so they can sell like the $10 or $15 million business, defer all the capital gains taxes, and use it to purchase another business. Is that what you're saying, or am I missing that? Because I want to make that clear. Because for some reason, I believe that the 1031 used to be able to do it for businesses, and sometimes people structure it where they say, "Well, I own the building. We'll increase the building value. We'll sell the business at a lower valuation, and we'll 1031 the building into another building." But 1031 exchange has been restricted. And I'm going somewhere with this, by the way. We have a solution that offers a deferral with capital gains taxes without having to hop through the hoops, without having to do a 1031, without having to do a like-kind replacement requirement, without having to chase the deal quickly, immediately. And a lot of our clients are very entrepreneurial as well. They want to buy and own more real estate, but they want to do it at their own timing, right? And so we use a structure called a deferred sales trust, which allows you to exit businesses, cryptocurrency, real estate, defer the capital gains tax, and then you can sit passively, if you'd like, into stocks, bonds, mutual funds, real estate, passive real estate. You can put it into T-bills. But better than that, you can be an entrepreneur and you can use the capital as the seed capital, all tax deferred, to build or buy a business, right? And so we had a client, for example, they sold a car wash business in San Diego for $13 million. They also own the building as well. and they ran the business. And so for them, they're using this as seed capital to buy land at a discount and to build more car washes and start more businesses. And so all tax deferred the whole time, no timing restrictions, right? No hopping through hoops or having to chase down deals. It gives you the chance to sell high and buy low. So have you ever heard of anything like this? It's called a deferred sales trust. I'm curious if you ever heard of that before.
I have not, but I definitely want to put that in front of all my people that are out there. That is a good option.